It's Jeb Hanwerger from GoldStockTrades.com. February 4th, 2020. What an exciting year it's been for gold, one of the best performing assets in 2019. After a really long struggle for many years, we finally had a breakout in 2019 in the critical 1400 area. And now the charts have changed dramatically. What was once a very oversold chart is now an overbought chart. And that's what's been concerning some investors recently, the high RSI on gold, and this breakout, even momentum, has been declining. So what that means is that it's quite healthy when you can't even see the 200-day moving average on the chart any longer. It's quite normal and healthy to see some pullbacks like this, and to see the 50-day for the rise to go in an orderly fashion with buyers and sellers, rather than going parabolic like what we're seeing in some other areas like the lithium sector, and Tesla and lithium is getting a huge boom, a huge influx of capital. And I've been warning you for the past 3 months with the breakout in Tesla, the recent numbers, that there'd be a possible turn in Q4 on the lithium stocks. So if you take a look here at the lithium chart, we mentioned that the downtrend was broken here in October, and we saw the crossing of the 200-day moving average. And now we're finally beginning to see this huge move in the lithium chart. So the Tesla and the lithium market, which was down for almost 2 years. It's a very cyclical. When it turns fast, it turns hard. We've been talking about it for the past few months. There's still a bunch of juniors that are dirt cheap, trading below 5 cents, trading for pennies, that have good assets. So I would highly suggest you reach out to me or other people in the industry to discuss which are those junior companies that are overlooked, but that may regain some exposure because of their assets in the lithium space. And you see here this shooting star here, Tesla, and record volume. We may be seeing a peaking out here of Tesla. It's gone incredibly since I sent out that tweet in October highlighting the breakout in Tesla. The stock has gone from 275 to hitting a high of 950. But when you start seeing these patterns like this, these stars, you got to be careful on record volume. It's becoming a little bit, but the reality is that the electrification of the automobile is here to stay. You know, Tesla might be a little bit overbought. There might be some short covering here. Taking a look at the Tesla chart, you see here record volume and this sort of star pattern, which may signal some exhaustion at the top here. But at the same time, we're seeing the traditional car companies like Ford really struggling. So we're seeing a transition to the electrification of the automobile. And still the question remains, where is Tesla and all these car manufacturers going to get the lithium, the battery metals, the cobalt, the nickel, the graphite, and especially the copper, which has been taken down recently from the coronavirus panic. So copper is really an interesting time, because that's critical for the electric vehicle demand, yet it's been beaten down. So looking for emerging producers or new producers, especially in the USA, producing copper now. We expect that to have a V-shaped reversal in the copper price. You can see here the copper price was taken down to really oversold levels here from the coronavirus concerns, and you saw a drop from $2.87 down to around $2.50, and now we're beginning to see that the panic fears may be over, and we may get a V-shaped a reaction back, a snapback reaction from these oversold levels back to at least the 200-day or 50-day moving average. And especially if you see the demand for electric vehicles soaring, It's going to need a lot and a lot of copper. And nothing to worry about with the GDXJ. You see that it was trading way above the 50-day moving average. We had the Iran attack in early January. We had the breakout, then the reversal. And we've seen some consolidation. And those that were expecting a sort of pullback have gotten it to the 50-day moving average. And so that's giving a secondary buying point to those who may have missed that December rally. There'll always be pullbacks and healthy profit taking along the way in this new bull market in gold. So don't get overly excited when it's beginning to soar, but look for these pullbacks to the moving averages and to support to get those secondary buy points. And here's one chart that we've been following for many years, and we've been positioning in the junior palladium miners that have soared. And we saw a huge move above the 50-day moving average, a little correction. So we see that we're heading back up, and it does not appear to be slowing down. We've had a few days of consolidation. Some people were expecting the top there, but as you can see, we were testing and we may go into new highs. I don't think the public has really gotten in to the palladium sector yet. I think that there's still room to go here. Bank of America is expecting 3,500 by year end. But if you've been long for a year or two like myself, it's okay to start taking some partial profits, especially when you get to these extremely overbought conditions and where, you're almost 100 points above the 200-day moving average. There is that risk of a correction. So if you've been long since 2016, since I've been writing about palladium, maybe there's going to be profit taking along the way, but I don't see the massive volume spike that comes with tops or the massive media behind the palladium, which I think that we are going to get. And it's not just going to be palladium. We're going to see a big move in platinum. We're already seeing it in rhodium. And I think the battery metals are going to get a big move, especially now that China has been putting all this money into their economy, with trillions into their economy to fight this coronavirus and with their markets, to stabilize their markets. It could be a huge boost and a snapback. We're already seeing it in the palladium market. We're beginning to see it now in the lithium market. We expect it in the rare earths market. Copper and silver are still very, very cheap. So stay tuned to gold stock trades. It's an exciting time, especially if you've been following palladium like I have, and if you've been following the lithium sector like I have. And the juniors, there's nothing wrong with the juniors. It's just pulling back to the 50-day moving average, quite healthy, and giving investors a second chance for the next run, which could be only weeks away. So stay tuned to goldstocktrades.com. It's February 4th. I hope to see some of you at the Money Show in Orlando. And thank you for tuning in.